Hello everybody, my name is Christian Charlo. Welcome to this market report. Today we're Thursday, January 22nd, 2015. Today folks, I want to talk to you about a movement on the financial. And this movement on the financial was led by two factors. On marketgurus.tv that you can have access for free for 10 days, we published that movement around 10:50. And the first factor that led this movement is, first of all, the ECB announcement, which announced a quantitative easing program that actually propelled American markets higher. Also, we had another news because Royal Bank of Canada here acquired this company here, City National, which is a small bank, and actually this has make the rally to continue on the financial sector. So where are we on the market situation? Actually, the market is really strong. If we take a look at this, we have a pursuit of the rebound. We could easily head towards the top of 208 on the SPY. But what I want to show you here is this upward corridor. Look, the fact that we're actually getting out of this upward corridor on the S&P 500 is definitely a great and bullish signal. But the strength of this upward momentum will be led by how the earnings seasons will play out. If we do have strong earnings from big caps in the coming weeks, of course we could actually easily either reach that or even go higher than that all-time high on the S&P 500. So how would you trade the movement on the US banks? You could go in with some ETF, and one ETF that allows you to do that is FAS, which is that ETF here, which could actually be propelled around 130 if the rally continues. The negative side about FAS right now is that it's already surging by 6.84%. And where should your exit point be if ever the ETF breaks 110, which is that support there? But from 110 to this price here, it's almost 8%. But if the rally continues, you could easily make 12% until 132. So you also have to take that into account if you want to buy FAS, which will allow you to trade the movement on the banks. What we chose on marketgurus.tv, that you can have access for free for 10 days just by clicking at the link below, we chose a company in the financial sector that offers a less loss potential, and this company here is Colony Financial. Why we have Colony Financial is because, first of all, look at this. The stock clearly broke that important resistance on a yearly basis. It made a clear breakout. It did stabilize for the last 3 months, and today it's breaking out. So the longer we stay within a sideways formation, the better is the technical signal that is coming out of it. So for a stock like Colony Financial, today it's a buy. It's our favorite on marketgurus.tv because we recommend it among our analyst choice portfolio, and our exit point is going to be around 24.21. So that doesn't make a big loss potential on a stock like Colony Financial. There are also other stocks that are breaking out, but on those stocks though, either they're big caps, so it's going to take more time before you make a 10-15% on those stocks, but they're nice breakouts. Allstate Corporation, it's a nice one. It's clearly maintaining its upward trend. However, for Allstate, you also have to take into account that we're almost reaching the top of an upward corridor. But if the SPY breaks its all-time high, Allstate Corporation might do so and might get out of this important upward corridor. So Allstate Corporation, it's a buy with an exit point at 69. MB Financial, it's also a buy, right? Because look at this here on a yearly basis, the stock is clearly rebounding after testing its upward trend. So this is the moment where you could get in. You have the stochastics that is just tilting towards the overbought situation, which is a sign that buyers are starting to get in. They find the stock cheap. And in terms of potential, though, you still have the 200-day moving average that has been broken out, which is a good thing. However, the fact that the 10-day moving average in red is not above the 30-day moving average, it's also something that could make us worry that can MB Financial pursue its rally with so much strength that could allow it to be propelled around 33 bucks. There's still a probability that we might actually have some correction throughout this rally on MB Financial. But if you actually want to get in and have, I would say, a medium to long-term horizon on MB Financial, are willing to tolerate some correction and are willing to tolerate a loss until 28.36, I think that stock could definitely be a good fit. There's also some big caps such as AIG, which is actually rebounding on its important upward trend. So this is definitely a bottom on AIG. I think it's a great entry point on a stock like that with $50 as an exit point. JP Morgan as well. Look at this, 55 is the exit point because this is an important support, and every time we tested that support, usually we had a rally. So this is definitely something that could be bought with 55 as an exit point. And Citigroup, look at this here, clear upward trend. It is a buy for Citigroup with $47 as an exit point on Citigroup. And First Horizon National, it's also a buy. Definitely like First Horizon National. The stock, I believe, could be propelled around 1375. The thing also I like is that this support here at 1232 also corresponds to the 200-day moving average, which is definitely a clear signal that this one here is a point where investors are reluctant to let the stock go further down. So you have to get out at 1225 on a stock like First Horizon National. But there's a stock like KeyCorp. It's a breakout, yes. It's actually rebounding in the low of its downward channel. The only thing I don't like, though, is all this congestions that we have here with the 100-day and 200-day moving average around 1350. So the fact that we have this congestions here, for me, doesn't make KeyCorp a buy. So you also have to take that into account, though. If you want to buy some stocks, though, take a look to see, first, are you willing to tolerate a loss until they break their former support? And do we have actually a potential, at least a 5% before we actually reach the 100-day and 200-day moving average? And on KeyCorp, it's not the case. So overall, folks, yes, there's a bullish movement on the financials after the ECB announcement and after Royal Bank of Canada decided to buy City National. Two strategies to get into the financial sector, either with some bullish ETF, FAS, right, or with some stocks. On MarketGurus.tv, our top pick is Colonnade Financial. All those stocks here are all buys, except KeyCorp, which is not our favorite. So all those stocks here, you have to make sure that if you're buying them, make sure that you put your stop loss below that support, and also make sure to follow how the earnings seasons will play out, because as I said, it's good that the S&P 500 got out of this upward corridor, but the strength of the rally will be determined by the earnings seasons. So you need to also monitor how the earnings seasons will play out in the coming weeks. So that's it, folks. See you next week on MarketGurus.tv for this Chronicle, and I wish you a good trading.